Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1386A, and today's date is September 25th, 2017, and the title of the episode is The Economic Mirage That the Central Bank Created is Disappearing. Let's get into the economic collapse financial news. Now, as we know, the Fed has been trying to figure out the inflation rate, and of course they have their own calculation, and they're saying that inflation, well, it's nowhere to be seen, and they're trying to boost inflation in the country, but we've seen it everywhere. I mean, if you're going to college, you know that college tuition has gone up dramatically. If you're buying a home, you know, in certain areas, housing has gone up. We know the stock market, it's gone up there. If you're buying an automobile, you know car prices are going up. And if you're going in and you're buying food, and I'm talking about the food that's actually grown, I'm not talking about the chemically altered food, you see those prices are going up. And what we're seeing is that the New York Fed, the Atlanta Fed, all the different Fed houses, they're calculating inflation completely different from each other. And they're getting all different types of numbers where they're showing that inflation is a lot more than 1.4% or 1.9%. When we look at the inflation coming off of the Atlanta Fed, they are saying that inflation is around 2.74%, and this is the highest since November of 2007. When we look at the New York Fed, they're saying that inflation is around 2% or so. And when we look at this, we can see that these numbers, well, we know that inflation is completely manipulated. We know that they're telling us that inflation is low because they're pushing inflation in all different areas. And right now, if we look at shadow stats, inflation is much, much higher. And we're approaching like 6, 7, 8% inflation at this point. And it's probably going to go even higher because the Fed had to manipulate where the inflation has gone. Now, they basically took the inflation and they shoved it off into different countries. And as we know, it was in housing, it's in the stock market, and many other areas. But it is starting to show up in areas like the supermarket, which we've been seeing for a very long time. And the reason why they're keeping inflation hidden like this is because they want to keep interest rates very low. They want to pretend that everything is fine and have the banks borrow a lot of money, have corporations borrow a lot of money. And we can see this is continually happening. Now, corporations right now, they have been borrowing on this cheap credit because interest rates are very low. And they've been borrowing quite a bit, adding on to their debt, and they've been buying back a lot of their stock. And you think that corporate debt would grow in proportion to total sales. And what we're seeing is that this is not true whatsoever. Actually, sales are declining, revenue is declining, and the debt is continually moving up and up and up. Now, of course, when they come out with their earnings, corporations are showing everyone that they're doing very well. Now, this has been because of a lot of buybacks, because they're laying off people, they're closing some manufacturing plants, and they're doing a lot of other things. And what we're really seeing is that they're just taking on more and more debt. Now, the first thing that we need to look at is the debt at non-financial companies. Now, this excludes banks and non-bank lenders such as mortgage lenders. Well, the debt there has soared. Now, to get a feel of just how much, we need to look at 3 different areas of where the debt is and where this is happening. Now, bonds that are issued by U.S. companies in the U.S., their outstanding balances never even dipped during the financial crisis. They only flattened for a few quarters around $2.97 trillion. Since then, outstanding bonds have soared from record to record, in total 76% to $5.2 trillion. Commercial and industrial loans fell sharply during the financial crisis as banks stopped lending and as demand for companies kind of withered away. And after that, we saw things really start to take off, and we saw that the loan amounts, they kind of skyrocketed. So after the peak of the fourth quarter of 2008, it was around $1.56 trillion. Commercial and industrial loans fell to about $1.19 trillion by the third quarter of 2010. Then they soared and started setting new records in early 2014. By October 2016, they were up around 35%. Now, the outstanding balances of these forms of corporate debt combined, as issued in the U.S. by non-financial companies, these include debt issued by privately held companies such as Toys R Us, which is owned by private equity firms and just filed for bankruptcy. These categories of debt combined have soared, like I said before, 35% from their peak and 52% from the trough. Now, when we look at this, we can see that there is a huge amount of debt right now. And the values of the companies should have moved somewhat in parallel, but the Wilshire 5000, the total market index, which tracks all publicly traded companies in the U.S., has soared 100% since the prior peak and a stunning 347% from the trough. Now, even more telling is the third quarter of 2014, as sales went nowhere. The Wilshire 5000 index has soared by 34%. So in short, debt jumped by 35% since the prior peak of the financial crisis. And sales, they really didn't go anywhere. And we know this is something that the corporations cannot hide. They can't hide the revenue. They cannot hide the sales. They can basically say, push that off to the side and tell everyone to look at their earnings. But the sales and the revenue is very difficult to hide during this whole entire period. So what we're seeing right now is that corporations, they have been taking on a huge amount of debt to convince everyone that the economy is doing well. And at the same time, while they're taking on this debt, they're using it to buy back their stocks. They're closing plants, laying off people. This is all happening at the same time. Now, when we look at the total economy right now, we know the central banks have created this mirage that, everything is fine, the economy's doing well, they're going to unwind their balance sheet. What that really means is they're going to start selling off what they've purchased during the crisis. So they added something like $4.5 trillion of, toxic real estate. They've taken and they purchased a lot of bonds, and they're holding it because there were no buyers of bonds. The banks, they didn't know what to do with all this toxic real estate. If they kept it on their books, the banks, they would have looked really, really bad. So the Fed had to go ahead and buy all of this, and now the Fed is holding all of this, and they need to get rid of it. Why do they need to get rid of it right now? Well, because they know there's another crisis coming. They know that this is completely fake, phony, and false. And what they're saying they're going to do, they're going to take this $4.5 trillion and they're going to sell off, every quarter a couple of billion, which is going to be absolutely meaningless because we discussed this before. It's going to take, something between 10 and 30 years, depending on how much they sell, if they can find buyers. Now, again, what they're most likely going to do is they're going to send this, to another central banking system for them to purchase all of this. And all they're doing is moving this all around to make you think that something's really happening. But this is absolutely meaningless at this point because the economy, from all the different economic sectors that we've been looking at, all of this cannot sustain itself. It's completely impossible. Now, let's think about this for a second. Since we've been looking at the economy over this period of time since 2008, we've noticed a couple of things. We've noticed that retail is continually declining, and there are more and more stores closing, more and more going bankrupt. They can't sustain themselves. Even though they have an online presence, it's still not working because the online presence is only 10% of the total retail market. We see corporations, their revenues and their sales are not coming in. So they had to borrow money at these cheap rates to keep the corporations afloat. We know the banking system, they were going under unless the Fed stepped in and bought all the toxic real estate. The banks right now, they're insolvent. Who cares about what the Fed says with their stress tests? It's completely fake, phony, and false to make you believe that the economy is okay. All of this was done to keep everyone in the dark. But what we've been looking at and everything that we've been showing is that all these different areas and all these economic indicators are showing us one thing and one thing only. That most likely we are in a recession right now, just that nobody wants to admit it. Of course, the government, the Fed, they don't admit this until much, much later. They go back in time and say, oh yeah, by the way, the recession started in 2016, just to let everyone know, and we're in 2018 right now. This is what they normally do. When we had the Great Recession of 2008, they didn't even admit we were in any type of recession, and they said it started in the beginning of 2008. So what we're seeing right now is that all these different things that the Fed tried to do, one by one, they are falling apart. And as things continually deteriorate and as things continually implode on themselves, like retail, like housing, like the GDP numbers, I mean, think about it. In the beginning of the year, they're telling us how great the economy was, how fantastic it was. It was a handoff from Obama to Trump. But as we can see, nothing has changed. There's no new manufacturing coming back to the United States. No new jobs that are being created. These are the same part-time jobs. These are the same waiters, waitresses, bartenders. Everything is exactly the way it was. Nothing has really changed whatsoever. And this is why the Fed is scrambling right now. And this is why the cabal and all the others are trying to create this event to cover up what is coming. And we've been following this all along. We're not predicting anything. We're not looking into the future. We're just looking at what was really happening every single day, and we're pointing out the problems and the lies of what the corporate media, what the Fed, what the government has been telling us. We've been looking at all their statistical information and showing people that this isn't true. I mean, can you imagine if we were this informed prior to 2008? All those people that were out there buying real estate left and right, they would have said, you know something? Let me start selling it now in 2007. I'm not going to wait much longer. Let me take my profits now. Let me make sure that, I have some type of insurance or I protect myself for what is coming. If we really looked at the subprime securities and we saw that they were completely garbage, a lot of people would have been a lot better off than they were in 2008. That's what we're doing right now. We're looking at every single area, pointing it out, doing this every single day, so everyone can make a decision on how to protect themselves for the next collapse of the economy. And it is going to come. There's no way they can keep this illusion alive. And you can see how the Fed is trying to scramble, how Trump is out there trying to tell you that the economy's okay. The economy is not fine whatsoever. Nothing has changed. Actually, it has changed. It's gotten a lot worse because as we can see, as we're going throughout this year, more and more stores are closing. The housing market is falling apart. And the Fed, they're stuck. There's nothing they can do. Except tell you that everything is fine. Except tell you that, yeah, we're going to unwind, that we're not going to change interest rates. They can't do anything. They are completely stuck in this mode unless something else happens. So from their actions and from what everyone is doing, we can see that we're getting closer and closer to the point where the economy is going to really implode on itself. And we're starting to see this. It's starting to show up in many different areas, and it's only going to get worse. After this holiday season, it's just going to completely get a lot worse. A lot of more retail stores are going to close. A lot more businesses are going to close. Corporations are going to report their sales, and they're going to be absolutely awful. GDP numbers are going to go down. They're going to try to manipulate them even further to show that people are doing much, much better than they really are. The restaurant performance index is going to take a dive, and we're going to see this happen. We've seen this happen every single year since we've been doing this. I mean, let's use common sense once again. The unemployment rate is going down, but retail sales are not improving. They're getting worse. Housing sales are getting worse, but more people have jobs. I mean, think about it. Does it make any sense? No, it doesn't, because everything is falling apart and it's accelerating, and there's nothing they can do to stop it. The debt is rising. The tax receipts are falling. There's not enough to pay the debt, and this is just going to get worse and worse and worse. This is why you need to be ready and prepared for what is coming. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.